Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply starts with another video, and this time this video corresponds to the market movement currently that is taking place, as well as one of the small cap stocks that I feel could do well over the next 5, 6, 8 years. There have been a lot of queries that are coming in uh, from all spheres that I need to come up with some mid cap, small cap picks which could do extremely well over the next 6, 7 years. And what I feel about, you can say, from about long term investment into the market at this point of time. So we'll discuss everything. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not a official portfolio advisor. Whatever discussions I do with respect to markets and stocks is purely based on my experience as a retail investor and a trader over the last 11, 12 years into the market. I've been doing this since 2011. So I'm bringing all my experience to the fore. So kindly, whatever decision with respect to investments, trading, etc., you take on any asset class, kindly do take a note that it is laden with market risk. Now, before I begin this session, here's a small request. Kindly support me on Patreon. Once you do that, it will help me grow the channel and help you also ask me questions, seek out answers in greater detail. Once you get that membership on Patreon, you'll have access to my portfolio analysis on different companies, discussion on domestic as well as global markets, updated watch list. So basically, I trade into a number of stocks. There are many stocks that I trade into, so that becomes a watch list. Whatever queries that you'll be having, I'll be answering that as well. So you can be a member there or on WhatsApp. For that, you can email me. So let's begin the session with discussing about the market. And just to tell you, and if you don't want to continue with the video further, I would be talking about Mrs. Bectors Food, this company, 8,000 crore market cap company. So we'll discuss about this in detail. So about the market, and I'll specifically talk about Nifty as well as the Midcap index. So if you look at the Nifty per se, if we see currently it is around 23,300 or so and is dipping. So I believe that Nifty is headed lower, especially with the kind of move we have seen today. Today's high was around 24,500, and again this time around 24,500 has been left behind. So I feel that mid caps, the way they have come up, the way they have got sold into was even bigger than the Nifty in the last 2 3 days, and that was the writing was on the wall, and I've been talking about it to my members for the last week or so. I've been churning portfolio, selling portfolio in the you can say first week of July, and then buying again and selling again. And I was telling that in all things, in all the stocks that you are into in the June month, since you can say since elections, one needs to book profits. And so most of, hopefully, people who were with me ended up making some money during that period. And now what happened was, yesterday, after the announcements for the long-term capital gain and etc., what has taken place, the market fell sharply, the mid-cap index fell, and it recovered very quickly. So if you look at a 5-day chart of the Nifty, you'll understand that the fall took place around 12 o'clock, 12:15, from around, you can say, 24,400 level. So it was around 11 o'clock when the budget speech began. The markets were doing pretty fine, 24,500 or so, and then it sharply, the market collapsed probably from around 12:15 all the way to 12:25, 12:30. In 15 minutes, we saw the markets dip from there all the way to 24,000 levels. 24,050, 70 was the low of the day, and then a sharp recovery after that. So what many experts thought, because of this sharp recovery, is that since the mid cap fell afterwards, although Nifty held on, that Nifty may perform better. But I had the same view that the way Midcap fell and the way the RSI had dropped over the last, you can say, 1 week or so, uh, mid caps had more value than the large caps. So why I'm saying this is that if you look at the Nifty EPS for FY25, and I keep talking about it, so FY25 EPS is going to be around 1200 rupees. Based on that, if I say that the market goes to say 24,600, for example, that was round about where the market was a couple of days back. I'm not talking of the highs, but let's say 24,600 based on 1200, it's 20 and a half times, even 1 year forward. Current earnings of Nifty is around 1052 rupees. Based on that, the high for the market was 20 round about 24,850. If you take 10,052 as the earnings, we were trading at 23.6 times at its highs. And normally, if I just give you an idea, normally the market trades around these levels, around these 23, 24 times. So if I take out say Nifty PE from the screener website, we'll have a better idea. So let me just take that out. Here we go. So current P is now down to 23.1 from 23.6, and this is how the PE trajectory has been over the last 5 years. So let's say 5 years, let's say 3 years. Over the last 3 years, this has been the PE trajectory. Normally, PE since 2022 has peaked out around 23.5, 23.7 times, and then it again drops from 23.5, 24 times to 20, 21 times, and then goes up again. This has been the kind of move that has been taking place continuously over a 6 months period. The average PE for the market has been 22 for this 3 year period, and we are currently at a PE of 23. So there could be a further decline of 1,000 points on the Nifty. That is not ruled out, since 1050 is the EPS. So 1,000 points, 1100 points on the Nifty could go away. We could be in a situation that we will be at 24,300 or so, 23,300 or so, and that would be somewhere below the 50 DMA. I think we will on some occasion, I mean for a little while, will go below the 50 DMA. That is not to say that stocks will not perform that well. So if you look at the mid cap index, that is where all the fun is taking place, and where things are really looking good. So if I look at, you can say, the CNX mid cap, if I open that up, then you'll have an understanding that the mid cap index per se is up, and it is beyond the 20 DMA. So Nifty is below 20 DMA and is going below or closer to 20 DMA and is trying to break that on the downside. Nifty, the mid cap index, the mid cap 100, the larger kind of, you can say, stocks, better mid caps, they are performing extremely well because the earnings are coming through. So its RSI is on the up from being 41. I closely watch the RSI. Normally I trade with RSI factors. So it was around 41 when the markets fell. Now it is around 56, the RSI. So there's a good room on the upside before a lot of froth builds up. So I think 70, if you look here, 70, 71 is where it peaks out from an RSI point of view. So the market yesterday fell sharply when I said that we were around 40, 41 on the RSI. This was when the Nifty Midcap went to 54,400, which is around the 50 DMA, in fact exactly near the 50 DMA, and it has recovered from there. So I believe midcaps should perform well, at least for the next 2 months. That should be the scenario. From a longer term point of view, again I'll say on the Nifty, I think there could be a good chance that we will be much higher from the current level. So if I just open Nifty again, we are at 24,340, etc. But if I say that 1200 rupees EPS for next year is possible in FY25, so by July next year, say in 1 year time, we should again be at least 23 and a half times. So again, 28,200 is my 1 year target, or you can say target for July 24 in the market, because the earnings are going to continuously be in the region of 13-14%. Now for FY26, the earnings should grow by 14%. So let me add that up. So we'll be around 1370. Now why 14% is because the country is growing at 8.3, 8.4, let's say 8%, and we are having you can say a government recognized inflation of 5%, and we say that margins for improvement in margins for the company could be around a percentage point or so. So 14% growth in earnings could be possible in FY26 as well. So this momentum could continue from based on 1370. On a higher side, the market could be around 32,300 in 2 years time. So I believe that any dips towards 23,300, because that will mean based on 1 year forward earnings, market to be trading at 19 and a half times. So I think major downside in my opinion, so if I say 19 and a half times, if you look at the PE ratio, you'll understand that normally market dips to around 20 times, around 20 times. If you see here 20 times, if you see here 20 times. So 19 and a half times will be very good levels to get into the market big time from a longer term point of view as well. This is, I'm talking of forward earnings. Currently we are at 23 times. We should dip a little bit. I think we are headed 1,000 points lower. Again, I say that even if there is a rally, I think it will get sold into on the Nifty, but mid caps could end up performing extremely well for the next 2 months at least, for that period. Now let's come to the stock that I was talking about. So Mrs. Bectors Food. Now what I like about this company is, what I like about this company is the kind of numbers that it has continuously posted. If you look at it on the sales front, what it has done is from March 18 it was 690, then it became 780. During the pandemic it dipped a bit, but we see 880 in FY21, 990 in FY22, 1360 in FY23, and now 1620 in FY24. So there has been a decent, you can say, if I look at from FY23 to 24 in the last 1 year, what has been the increase in terms of sales. So 19-20%. Normally the company is growing at 19 to 20%. That is a very good sign. So compounded sales growth over 5 years is 16%, 3 years is 23%, and profit growth on the same front, because the margins have kept on doing reasonably well. I mean, margins have not dipped sharply, not that it has moved up. So 12% in FY18, 12% in 19, 12% in FY20. Then COVID, the pandemic struck, and so it was 12-13%. Last year they did 15%. So this has been a consistent performer. This is what I like. Normally small caps do not perform that well, and that's why I came to the numbers straight away. Now let's just discuss about what the company does. So it is actually incorporated as Quaker Cremica Foods Private Limited in 1995, and it manufactures biscuits and bakery products that are marketed under Mrs. Bectors Cremica and Mrs. Bectors English Oven brands respectively. So basically they are into bakery products. Very few companies is into that segment exclusively that is listed in the market, and one of them is Mrs. Bectors, and that's why it's trading at 80-90 times. So the major, you can say, revenue comes from biscuits. Then they have branded breads and bakery products as well, and they do export. So it's the largest biscuit exporters from India. It contributes to 12% share of the total exports of biscuits from India in you can say calendar year 2019, and exports to 69 plus countries. 54% exports are under own brand. So that is how the company is doing. Company is doing extremely well, and this is a kind of a niche, you can say, segment that you can look at from a 5, 7, 8 year point of view. If you are a slightly you can say a taker of risk and can put in some amount, not a lot, maybe 3% of your total long term portfolio could go in here, because the market cap is slightly less. It's a small cap company, so I won't suggest that you go big into it. But over a period of time, if the company sales is growing at 20%, then you have profit growth that is pretty good at around 30-35%. I believe that this is something to be looked at from a longer term point of view. So this is a video on the stocks. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.